Don't give up, you know it's true. You gotta do what you wanna do.
Hello, welcome to UPSC Gangsters. Let's start with the Hindu newspaper business news analysis. Alright, so this is for the date 21st September. Alright, so let's start. The first business news piece. Tata Steel set for Europe venture with ThyssenKrupp. Alright, this is the heading. The subheading: non-cash transaction would create Europe's number 2 steelmaker, generating pro forma sales of about 15 billion euros a year with some 48,000 employees. So this is the subheading. So this is a heavy thing that is going on. Tata, which was previously trying to get out of the UK market, the steel market, is suddenly merging with another company, is into talks of merging with another company, and this would boost the sales to up to 15 billion euros. Alright, so this is bigger than what a normal turnout would be. Alright, so if $15 billion as such is huge, and 15 billion euros, because you know for a fact that euros always, when you take the exchange rate, euros always around 70 to 90 rupees. Alright, when you take 1 euro, so that is much more compared to a dollar. So this 15 billion euros means a lot of revenue. Alright, so let's get on with the news. The first point: Tata Steel is set to forge ahead with a long awaited merger of its European assets with Germany's ThyssenKrupp AG, after the firms signed a memorandum of understanding to create an equal joint venture. Alright, AG is a company under Daimler. Alright, so those people who partly own Benz and all that. Okay, so this has been a kind of memorandum of understanding between a German company, German steel giant, and Tata. Alright, so next point: this underlines the significance of the development of the two companies as they chart the difficult waters of Europe's steel market, including overcapacity and cheap competition from abroad. Let's stop this point here, because you need to know what overcapacity stands for. Alright, so overcapacity is a situation where the production, alright, and the supply is kind of high, but the demand is low. Alright, so meaning the factory is operating at its capacity, and that capacity is not used by the consumers. Alright, so less demand and more number of goods produced, that is only that would be known as overcapacity. Right, so that is happening, and also stiff competition from abroad. So here they're directly talking about China. Alright, they're talking about China, nothing else. Chinese steel has been really cheap. Alright, so that has wreaked havoc in many of the countries' steel production units. Alright, so not only Germany, but also Britain, and across India and Asia Pacific and all regions. Alright, so Chinese steel has flooded their market, and even Indian companies, they purchase steel from China because they are cheaper than the domestic steel producers. Alright, so that has been a problem for the steel companies elsewhere. So continuing with the point, the merger, if it goes through, would create Europe's largest steel company after top ranked ArcelorMittal. Alright, so ArcelorMittal is the largest steel company of Europe, and this is going to be the second largest if merged. Alright, so this is the news piece. So this is it about this. So you probably understand, right, by now how all these goes, and yeah, one more point under this. So one more point. The path for which had been eased after Tata Steel reached agreement with UK authorities to reduce its UK pension scheme liabilities. Hence, months of uncertainty over the fate of a potential transaction, and underlines the significance of the development to the two companies as they chart the difficult waters of Europe's steel market. So, that is the thing which we saw earlier, and they're saying there was some sort of an issue with the pension schemes. Alright, so that had to be sorted out, and after that thing is entirely sorted out, this merger is happening. Alright, so let's see. Next point under this: today's announcement marks the latest step in building a future for Tata Steel's activities in Europe, which is sustainable in every sense, Tata Steel Europe Chairman Andrew Robb said on Wednesday, following the signing of the MOU for the 50/50 venture to be named ThyssenKrupp Tata Steel. The merged entity would annually supply about 21 million tons of flat steel products worldwide. So they are eyeing the global market in this. Alright, so without a doubt they are eyeing the global market. Alright, so next point under this, the side heading for it is non-cash transaction. The company created by the non-cash transaction would generate pro forma sales of about 15 billion euros a year, with about 48,000 employees across 34 locations. The companies estimate the merger would generate up to 600 million euros in synergies. Alright, so the transaction that took place in lines with the memorandum of understanding is a non-cash transaction, meaning it is a wired transaction, so completely legal and no black money and all involved. Alright, and they're saying this will generate up to 600 million euros in synergies. So what do you mean by synergies? Synergies are cooperation between two or more organizations. Alright, so they are either having a memorandum of understanding or they are working together, so that is only known as a synergy. Alright, so getting on to the next point, the same point. So up to 600 million euros in synergies a year through the integration of research and development and commercial functions and optimization of procurement and logistics. So this is self-explanatory. Logistics, I told you, it is about transportation and distribution and all that. Alright, so they're going to optimize every single thing with this merger. Next point, production at the joint venture would be subject to review in 2020, generating further synergies which would be determined by a number of currently indeterminable factors such as Brexit and the regulatory environment at that time. Right, so they're saying the full merger would have a review by 2020, whether to completely go in or go out or whatever they're going to decide, which is going to be decided by Brexit and the climate, the economic climate at that period. So Brexit surely has some sort of bearing on this, because whatever they're trying to do, they will try to comply with the Euro standards. Alright, so Brexit would hamper that. So right now, even the banks are moving away from London to Frankfurt in Germany. Alright, post the Brexit situation. Meaning all those important banks, the big banks headquarters, all are moving their financial headquarters to Frankfurt, because London was previously known as a financial capital of Europe, but now they're saying slowly Frankfurt is going to be the financial capital of Europe. So let's see how things turn out, alright, in the future, because someone has some UK politician has said that Brexit can be avoided. There is a scope of pulling back, so let's see what happens. Alright, so next point, by combining our steel activities, the burden for each partner are lower than they would have been on a standalone basis. So this is fact, alright? Together when you do, the burden is actually distributed. Said Heinrich Hessinger, CEO of ThyssenKrupp, pointing to the pressures on the industry from structural overcapacity in supply and constantly high import pressure. Okay, next point. The development marks a turnaround from last March when Tata Steel announced it was looking for a buyer for its UK steel business. So remember how Tata was about to shut down its UK steel business, alright, last year. So that was, they were owning the biggest unit, alright. So that was based in UK. So that was in troubled waters and they found it no more profitable and all, and they wanted to sell it. But right now things have changed. Months, the same point, next line. Months later, the company confirmed it was in talks with ThyssenKrupp over the merger of assets. In August, Tata Steel UK got the go-ahead to separate its £15 billion pension scheme from the business, in a deal that cost the company £550 million and a 33% equity stake. Alright, so basically the pension asset group differs along with the steel company itself. So now they have separated both of them. Well, that's what it says. Tata Steel UK got the go ahead to separate its £15 billion pension scheme from the business. Alright, so after separating their pension wing, alright, they are getting into this business. Alright, so that's about it for this news. Let's get to the next one. The next news piece, the heading is Hindustan Coca-Cola testing 20 local products. Alright, so under this I'm gonna tell you the important points alone. So first point, we will be kicking off shortly our next new greenfield facility in Sanand in Gujarat in the last week of December or first week of January, Ms. Rogiro told correspondents in Bengaluru, where its corporate headquarters is situated. The phase 1 of the project is estimated to cost about rupees 450 crores. It will have lots of green initiatives, automation and robotics involved. Alright, so she has mentioned greenfield facility here. So what is a greenfield facility? So greenfield project basically is a project that uses an already used land, alright, or an already constructed building. So there is no demolition or remodeling that happens, alright. So there is a structure or a building that is existing existing previously, alright. So it has been that you're not doing anything to it. You're not like kind of making big alterations or you're demolishing the place. No, you're just using the facility. Alright, you're just renovating it a little bit and you're using the facility. So this saves a lot of materials and this saves the land, you know, the factory from getting a new land and constructing and all that. You know, there's a lot of environment degradation that happens and all. So all these things are avoided under greenfield initiative. Alright, so you have to know what a greenfield project or a greenfield facility is. Alright, so next point, it will have multiple bottling lines for carbonated beverages such as Coca-Cola, Sprite, Fanta, Limca, Thumbs Up juices and juice-based drinks like Minute Maid, Mazza and bottled water and Kinley soda. So you should know one thing, the juice, right, the normal ones, juice-based drinks like Mazza and those things, there has been a rise in that, alright. So there has been a consumer demand that has been rising for these kind of juice-based drinks, not for the carbonated drinks. Carbonated drinks, the thing are going normal, alright. So the Pepsi, Coca-Cola, it's like going usually, but this suddenly there has been a spike for the juice-based drinks. Alright, that was in a separate report I read. So next point, according to Euromonitor International, increasing health awareness among consumers and their preferences for health and wellness products are the likely reasons for strong growth expected in juices. Alright, so this is the European agency that is actually saying why there has been an increase in juice-based drinks. Alright, so the same point, next line, carbonates, both cola and non-cola carbonates were likely to see sustained slowdowns in volume growth rates, according to an April report. So the carbonated drinks are supposed to go down, alright, according to their estimates. Okay, so and the juice-based drinks are going up. That is what the estimates say. So next point, India's food industry is estimated at rupees 14,500 crores. The non-alcoholic beverages market is worth about $5 billion. According to $5 billion will be somewhere around 30,000 crores. Alright, so $1 billion is like 6,000 crores, so you do the math. Alright, so according to Indian Beverages Association, it is $5 billion worth market, the non-alcoholic beverages. The health beverages market is $300 million worth and is the fastest growing one. The fruit drinks market is rupees 6,000 crore, which is 1 billion. Alright, almost 1 billion. So in this, we get to know that the health beverages market is the fastest growing. Alright, so you have all these drinks like Gatorade and those drinks to boost your energy, those drinks to boost your metabolism and all that. So there has been a spike in those sales. Alright, next line, aerated and carbonates are actually growing, Miss Rodrigo. So the same, the chairman, the head of the unit, she's saying carbonates are actually increasing, alright, which is kind of conflicting to the European report. It is an interesting thing because aerated and carbonated from an industry standpoint is growing. It has grown about 5% in India. It accounts for 60 to 65% of our business. Our aspiration is to have double-digit growth. Prior to my coming in July, we were having a single-digit growth. After July, we are seeing double-digit growth. Alright, and next point, subheading is local products work. In India, local works. Different customers need different products. Hopefully, then next will be Mozambique juice industry in India. Alright, so just like everybody else, India is also seeing a spike in juice industry, juice-based drinks. Alright. So last point what she has said is we will be pushing the existing factories to see how to make new juices, carbonated drinks and new products. So this is nothing very different. This is usual, alright, business as usual this is. So the thing you have to remember is juice-based drinks are getting the upper hand right now than compared to the carbonated drinks, and about the greenfield project, greenfield facilities. So have that in mind. Let's move on to the next news piece in business. M&M, which is Mahindra to buy Turkey's Erkunt tractor foundry. So this is the heading. Subheading, M&M, the global tractor industry's #1 maker by volume and 5th largest in terms of revenue. So this is all about this news, but this is a fact. Mahindra, the global tractor industries, they are the #1 maker when you take the global tractor industry by volume. Alright, so which means that they are the largest producer, Mahindra and the 5th largest in terms of revenue. Alright, when it comes to net worth, they are the 5th largest. So these are the facts that come under this. Next, moving on to the next business news piece. Next heading is Olympia Group starts monetizing excess assets. Alright, Olympia Group starts monetizing excess assets. Subheading, expects to double rental revenue to rupees 200 crore by 2022. So Olympia is actually a real estate company, alright, a real estate promoter, real estate giant, and they excel in constructing all these IT parks and all that. So IT parks and all that, it's not owned by anybody. The constructor actually owns that, and the companies that occupy their places pay the rent. All right, so they are looking to increase that to 200 crores by 2022. All right, so let's go to the first point. Following a slump in real estate businesses, realty major Olympia Group has started monetizing some of its excess assets in Chennai to develop ecosystems to promote occupancy of residential homes, a top executive said. We are building 3 schools, co-living apartments, luxury and high-end villas, said Ajit Kumar Chordia, managing director of Olympia Group. Building schools in residential areas will attract new admissions, which in turn will increase our occupancy rate. We are trying to get some rental from these properties which we were unable to sell. Alright, so all these properties which they were unable to sell, they are trying to build some attractive places nearby to attract people. Alright, some people build malls, shopping centers and other places. These people have pinned their hopes on building schools. So if you had the city building games and all that, like SimCity and all that, when you build a school or when you build some temple or some sort of extra facility, the occupancy rate obviously increases. A lot of people come to live there because of the availability of all these resources. Alright, so that is what this group is essentially aiming at. Alright, so such things, colleges and schools and all that or the coming up of some factories and all that will increase the population of that area in turn. Alright, so that is what they are eyeing at. So that is all about that news. Let's move on to the next one. First, the heading: January to July tea export volumes rise by 4.6%. Subheading: Imports by competitors Sri Lanka and China increase. Darjeeling impact muted. So this is the subheading. Let's go for the points. Notwithstanding the loss of exports on account of the prolonged closure of Darjeeling tea estates, India's tea exports have increased by 4.6% by volume in the first 7 months of 2017. So there has been a 4% increase in tea exports. Alright, and what they mean by the Darjeeling tea estates closure, it stands for the Gorkha agitation that happened, right? The Gorkha agitations that were happening around Assam and Darjeeling and North Bengal and all that. Alright, because of that agitation, a lot of tea estates were shut down. Alright, so that is what they mean, for many days. So even after all these things, there has been a rise. So going to the next point, interestingly, 2 countries where Indian teas made major inroads were China and Sri Lanka. Now this is an important point. It seems the 2 major countries that have been purchasing tea from us in this quarter has been China and Sri Lanka, who are known for producing tea already. Alright, so yeah, let's continue with the point. Among India's top rivals in the global tea arena. Alright, so China and Sri Lanka are supposed to be the top rivals for India. Alright, when it comes to tea exports. So exports increased by 150% to the island nation and 71% to China. So 150% to Sri Lanka. There has been an increase of 150% to Sri Lanka and increase by 71% to China, according to Tea Board statistics. We hope to maintain the trend. S. Sandhurajan, Secretary of Board, tells the Hindu. Right? The more than 90-day closure of Darjeeling tea industry by the Gorkha Janmukti Morcha, which is demanding a separate state, has harmed the interests of the premium and specialty teas but has not hampered India's overall tea exports, either by volume or by value. Alright, so from this point we get to know, because of those agitations, the specialty teas, the premium quality ones, the most costly ones, alright, those things alone took a hit. Alright, their sale alone, their exports alone took a hit. But when you take the overall picture, the export has been going well. Alright, it has actually risen, that we can see from the very previous points. Alright, so next point, Darjeeling produces about 8 million kilograms annually, of which about 6 million kilograms is exported. So you actually needn't know the numbers, alright, but you should know that the majority of Darjeeling is going for export. Alright, so from 8 million kgs annually, 6 million kgs is going for other countries. Alright, so that is much more than half. Alright, so anyway, continue with the point. So 6 million kg is exported. Production between January and June in the 87 tea estates in Darjeeling halved from 4.1 million kilograms a year earlier to 2.1 million kilograms. No export figures are available, but exporters are facing order cancellations and queries revealed. Alright, so these might be happening because of several factors, including the GST thing that is going on right now, maybe. Alright, so but they are saying in 87 tea estates the demand has actually gone down. Alright, next point, 3 countries that have played a prominent role in the current year's export scenario: China, Sri Lanka and Egypt. An erstwhile green tea consumer and producer, China has of late taken to black tea production, of which there is increased demand from the youth segment. Alright, the black tea and green tea thingy, right? So China has stepped up its production on that. It has seen a rise on that front, and therefore green tea production and black tea production has really increased. That is why the conventional tea thing has to be imported from India for them. Alright, so same point, next line. Sri Lanka has increased imports of Indian tea for blending, it was learnt. Alright, so for blending sake, Sri Lanka has imported. So these are the reasons why both the countries have imported a lot from India. China, because it has focused its production towards green tea and black tea, and Sri Lanka, it wanted to blend. Alright, so next subheading under this, Egypt's imports rise. Alright, let's get on to the point. Egypt, a traditional market for Indian teas, has almost doubled its imports in the period. India has also seen a rise in exports to Ukraine and Kazakhstan. Alright, so Egypt has started to consume twice the number, alright, it previously did from India. So this is a point you have to note. Alright, same point, next line. Taken with Russia, the CIS region is India's single largest bloc for tea exports. So the CIS region is the single largest bloc for Indian exports, not even USA, not any other continent or any other place. So this has been the region, the CIS region has been the largest importer of tea from India. So what is CIS? CIS is supposed to stand for Commonwealth of Independent States. Alright, Commonwealth of Independent States, don't confuse with the Commonwealth nations that comes under Britain. No, these Commonwealth of Independent States are ex-USSR states. Alright, so ex-states of Soviet Union. After breaking up from the Soviet Union, they formed a conglomerate or something like Commonwealth of England. They formed a Commonwealth of Independent States. Alright, so this region has been the single largest bloc for tea exports from India. Alright, so let's this is about all about the news piece based on tea in India. let's go on to the next one. Next business news. The heading says peer-to-peer lending platforms are NBFCs. RBI to regulate P2Ps henceforth. So the first point under this, peer-to-peer lending P2P platforms will be treated as non-banking financial companies, okay, NBFCs, and thus regulated by the RBI, the central bank Sept. P2P lending is a form of crowdfunding used to raise loans which are paid back with interest. So P2P, I think we have already discussed what P2P is. They raise the loans from the e-platform, right, from internet and all that. So from that they try to raise loans for their businesses. Okay, so that is only P2P lending. It can be the same point. It can be defined as the use of an online platform that matches lenders with borrowers in order to provide unsecured loans. Alright, so this is what the P2P is about. So they have given the definition as the use of an online platform, like I said, that matches lenders with borrowers in order to provide unsecured loans. Some sort of this is a type of crowdfunding. Alright, so this type of funding by using the e-platform. Next point. The Reserve Bank of India specifies a non-banking institution that carries on the business of a peer-to-peer lending platform to be an NBFC, the RBI said in a notification. As per the RBI, the business of a P2P lending program is defined as the service of loan facilitation via online medium or otherwise. So it's saying whatever it is, they are handling loans. So therefore they will be coming under non-banking financial institutions purview. Alright, same point. The participants who have entered into an agreement with that platform to lend on it or to avail of loan facilitation services provided by it. So this is the conclusive point. So P2P has come under NBFCs. The prelims questions might be P2P crowdfunding, P2P lending. Does it come under non-banking financial institutions or not? Alright, so they might give you multiple choices, and if P2P is there in one of the options that says these are coming under NBFCs, P2P is right. Alright, so that is the correct answer. So let's go to the next business news piece. The last one, this is the main heading. SBI Life allots shares to 69 anchor investors. That is the main heading. So let's get to the point straight away. SBI Life has been the country's largest private life insurer. Alright, private life insurer, not like LIC. LIC is like away from this. SBI Life has been the country's largest private life insurer. Alright, and when it comes to the private companies, SBI Life has been the largest in new business premium generated each fiscal. So that is the same point. SBI Life has been the country's largest private life insurer in new business premium generated each fiscal. Same line, the same point. According to HDFC Securities, in fiscal year 2016-17, the company had a market share of individual rated premium of 20.69%. Alright, so nearly 20% of the market is with SBI Life, the private insurance market. Alright, among private life insurers, it is 20.69% and 11.16% of the entire life insurance industry in India. So when you take LIC and other insurance schemes like Prime Minister's Bima Yojana and all that, if you take that into account, the entire country into account, SBI Life manages to occupy 11.16%. Alright, and one thing about this news piece, in the heading it was given SBI Life allots shares to 69 anchor investors. So what are anchor investors? That you should know. So Anchor investors, alright, they are basically investors who are invited by the company to subscribe for shares ahead of IPO, initial public offering, to boost popularity of that issue. Alright, so basically they invite well before the IPO is actually dated for. So it is like a pre-show. It's like a a pre-show before the main show. So these people are invited, the anchor investors, to subscribe for shares. So if these big companies come before the initial public offering and start subscribing and all that, the market people will get to know that alright, even the big companies are kind of interested in its shares. So this is sort of a publicity, and the word will spread, and a lot of people, investors, will come to buy shares from whichever company that is offering the initial public offering. Alright, so this is basically what anchor investors stand for. This is all the main economics and business news for the day. I'll see you with the next news analysis in business for the date of September 22 very soon. Alright, take care.